Support and resistance. Floors and ceilings in the market make for areas that will both attract and repel the market. Support is a floor that price bounces off. The market moves down, hits support, and bounces off it to move upwards. Price is supported from dropping any farther. Resistance is a ceiling that price rises to and is forced back down. The market is resisting the rise of price. The main peaks are called major areas of resistance. The main valleys are called major areas of support. The zigzagging highs and lows in between the main areas of support and resistance are known as minor areas of support and resistance. On the chart to the left, we can see the major resistance and the major area of support. And in between, as price is rising from support to resistance, we're going to make these little zigzagging minor areas of support and resistance along the way. Support is important because we find that if an area is used as support once, it is likely to be used as support again. If the 1.2345 price is a price where the market was rejected previously, there is a good chance that it will be rejected from there again in the future. Resistance is the same way. As price finds resistance at a certain price, it will likely find resistance there again. It's important to note that support and resistance are areas and not exact prices. The initial point of support or resistance can be an exact price, but the price will act on this area in the future and either get close to it without touching it or pass it a little bit before it turns around. In the image, you're going to see all the valid examples of support and resistance levels. On this chart, on the image that you see to the left, we have this initial area of resistance formed by the high. Price drops down and then comes back up again, and it will pass that area of resistance just a little bit, and it will be rejected. Price will drop down. Because price has made it through a little bit and then come back down, this area is still considered resistance. The market has a momentum to it, and it's very difficult for it to turn on a dime. So this means that the market can, at times, push through a little bit and then get dropped back down. After that, price gets moved down and then comes back up to this area of resistance and doesn't quite get to that exact price, that exact initial area of resistance. It's rejected just before it gets to that area and gets turned back down. This area is still considered resistance. And the same goes for support. We get this first area of support at the bottom. Price gets rejected, comes back up. When it comes back down again, it gets close, but doesn't touch that exact same price. It gets close, and this is still valid support. Comes back again, and maybe we'll push through it just a little bit, get rejected, and then move back up. Whether price gets close or passes it a little bit, as long as it's in the same general area, this is going to be considered support. Now, support can turn into resistance. If price breaks through support, it'll want to come back to test this level from underneath, using it as a new level of resistance. You see on the chart to the left, price came down, made a level of support, got rejected, came back up, and when it came down again, it was able to push past it. It broke through and it dropped below. Once price got below, it came back up to that level of support and is now using it as resistance. And the opposite is also true. Resistance turns into support. If price breaks through resistance, it will want to come back and test this level from above, using it as a new level of support. The image you see on the left, price moves up, forms a level of resistance, gets rejected. The next attempt, price breaks through this level. Once it breaks through and is above this level, price will want to come back from above and test that level now as support. Once it gets to that level, it will be rejected and price will move back up. When price is able to push past a level of support or resistance, it will want to keep going. And this presents us with a good opportunity to place a trade. These are generally called breakout trades, and there is some validity to these, and we can make money. watching support and resistance levels, price bouncing off of the levels, they can be profitable. Price breaking through these levels also can be profitable.